Good morning traders from each and every part of the world that you're joining this series of the daily morning market call from. My name is Kefa Eric, one of the market analysts here at HFM. HFM, your number one broker in Kenya and beyond. Now, before we dive in, I would like to bring it to your attention that this is going to be a pre-recorded YouTube video to mean that you could find this video at your convenient time and rewatch it again on our YouTube channel at HFM Kenya. Kindly like, subscribe, and click on the notification button so that you're not left out in future content that we produce from time to time, with our aim, goal, and purpose to bridge the financial market educational gap so as to make sure that all of us are brought to light with the happenings in the financial markets. Now you can also share so that we improve on our algorithms and get to reach more people. And our commitment to you is we will keep on making content that is of value to you in regards to the financial markets. So I'll give a 5-second moment of silence to allow us like, subscribe, and click the notification button, and possibly share to your friends, family, and social media handles so that it reaches more people. With that out of the way, I would share my screen. Thank you very much. We look at economic data. Nice. At our website at HFM Kenya, at hfm.com, apologies, at hfm.com, you could find the economic calendar here, which is quite essential in understanding fundamental analysis. And you can find it here on Tools and Education, and it's right here, economic calendar, and then it's going to print out the news that have come out for you to interpret. So you could also choose to filter to have only the high impact, if you may like, so that you have raw data. Very nice. So today we are to experience PPI, the Producer Price Index, which is to come in in the course of the day during New York session. And the Producer Price Index is a key economic indicator. Which is used to inform inflation. And we know that the central banks of the world monitor inflation. In this regard, the Federal Open Market Committee monitors inflation so as to use monetary policy to control inflation. So when it comes to commodities supplied for personal consumption and also capital investment, government and export, the Producer Price Index for final demand is used in the United States to measure price changes. The PPI is composed of 6 main price indexes, and that is the final demand goods, which accounts for up to 33% of the total weight, which includes food and energies. We also have the final demand trade service, which accounts for 20%. Immediately after that, we have the final demand transportation and warehouse service, which come out at 4%. And we also have the final demand service less trade, without trade, transportation and warehousing, which comes out 41%. And we also have the final demand construction at 2%. And lastly, we have the overall final demand, which accounts for 2% of the total weight. So to narrow it down and to make it quite simple, having to understand fundamental analysis main characterization into 2 segments, that's the inflation data and labor data. Inflation data is what we could like to call, in layman's language, the cost of living. The prices of the cost of living. So this could be categorized into food prices, could also be categorized into rent, and it could also be categorized into transportation. You might also want to categorize it in the part of transportation as car loans, and in the part of rent as mortgage or house loan, right? So these three things would majorly encompass the full meaning of inflation. When the cost of these three things go up, the economy is saying to be doing bad. It's inflation. Again, when it goes down, but extremely below central bank expectation, the market is said to have been in not in a state preferably by the central banks. So the PPI being produced, being printed today, is going to be a major reflection of the CPI, which is coming out tomorrow, the Consumer Price Index, which is coming out tomorrow. So when it comes out positive for the PPI, and we know for the past 3 months the PPI has been coming out positive, which could signal possible inflation. And possible inflation, we know that the central bank is going to cut rates, and those are the possible outcomes of cutting interest rates in response to the inflation situation. Now, having that in mind, moving on to the chart. Very nice. And usually today we start with gold, which has been printing price to the upside. Gold has been taking out its highs, and we could possibly see it take out the highs, continue taking out the high, which means we could be recovering from the downtrend that was experienced during in last year's US election, call it the Trump's trade, where we saw investors having confidence in the United States dollar, which gave it a little bit of strength, actually significant amount of strength. And now moving into the future, we see there is possible change of character and prices printing to the upside, but this would be confirmed by the taking out of price of highs as we proceed into lower time frames to see this possibility of that. So as long as the highs will keep on being taken out, for example, this high here at 26.73, it would indicate that we will continue going in an upward trend, and would be looking out for buys in that regard. If I go to the 4 hours to see it clearly, we would like to see, regardless of the time frame, it's good also to understand top-down analysis, where you respect or you are aware of higher time frame expectations, and you go to lower time frames to execute in line with higher time frame expectations. This one is for day traders. For scalpers, they might tend to disagree, but majority of them would want to follow price action. So if I was to do an extension of this area of interest here, where we see price broke above right here, I believe this was sometime early last week. Price broke, came back to retest, gave us a fake out, giving us a retest. We want to see the highs to continue to be taken out so that we continue riding this high trend for buys. On the flip side, when the lows are taken out, depending on the economic data that is going to be printed with forecast on gold, on PPI, which is to be printed today, if it comes out positive, it will strengthen the US dollar. Positive is higher than what is forecasted and possible the previous. So if that happens, it's going to strengthen the US dollar, and we might see a little bit of retracement to the downside. But before that, we know very well that price is printing higher highs and higher lows to suggest that we're in an upward trend. When we go to Euro USD, with Euro USD, we understand that the US dollar right now is strong. A possible uptrend would be seen in US dollar quote currencies, which have the US dollar coming in first, which have the US dollar coming in second, beg your pardon. We know that it's in a downward trajectory, so we are looking for sales. That's from the higher time frame, that's the daily. If we go to the 4 hour to see much more details, we see the lows being taken out, supporting that narrative in anticipation to PPI and later on CPI. So price would normally retrace, like we had indicated yesterday. It would retrace to premium levels and to discount level and keep on being in a downward trajectory. So ours is to look for those premium levels along areas of interest, and I could spot one here where we see price repeating its right to continue riding the lows as we anticipate economic data coming out. For GBP USD, from a higher time frame, we know that it's going to be moving in a similar fashion. It broke out below this key level here, or support if you may like, and price printed to the downside. For the daily time frame, we see a pin bar, and we know that could be a reversal candlestick pattern. By interpreting candlestick language, you'd see this long wick with a small body on the top to indicate that we are possibly facing buy pressure. And this could be for purposes of retracement, for price to continue printing price to the low. If I come to the 4 hours, I see clearly what's happening. Right? If I go to the 1 hour, we would want to see the lows being taken out to support that narrative for us to continue riding on the sells. And we called it out up from up here, if you guys were keen enough to remember. AUD USD, also printing price to the downside. It's on a bearish trend, and you know bearish trends is giving us confluence to find sell opportunities, price sell opportunities as we move price to the downside. If we go to a lower time frame, we see price has gotten back to the area of interest. Just let me push this. Begin to be hesitant, but this area of interest, we would want to see how price react from this. What's the candlestick language here? And lest I forget, think we have news coming from Australia. Actually already came out. Let's see how that interprets in anticipation to PPI. But we know that generally we're in a downtrend, so sales would be safe, and we call it out from this fake out up here. For US dollar based currencies, with the US dollar coming in first, we see that price is printing, making higher highs and higher lows to support the narrative of a blossoming US economy, suggesting that for US dollar based currencies, buys would be much more convenient. A scenario that we are going to see on USD JPY also would want to see these highs being broken out to support that narrative. When we drew this area here yesterday, I would like to extend them, but every time I draw them before, when we come the previous day, they are extended, so I prefer to draw them in real time. So we want to see this area being broken out and price printing to the upside to support that particular narrative. Possible pullbacks would be an opportunity to get in for even better risk to reward. USD CAD also giving us price in that fashion. Price reacted from this area of interest a couple of days ago. Price is forming what Technical traders would call the double top, but if you follow market structure, to keep it quite simple, we go to a lower time frame. Would want to see this consolidation being broken out, and a consolidating market, we have times without number mentioned that is a market where the price is printing equal highs and equal lows, a scenario that you're seeing here. I would possibly could do it here so that tomorrow when we're doing this series we could revisit. We want to see price break above this high to support the narrative of blossoming US economy as compared to the Canadian economy. For GJ cross pair, we look at the public demand. Price again reacted from this upward trend. Very nice. So if you go to a lower time frame, would want to see the highs then being taken out. Let's see again. Would want to see this high being taken out right here. Price breaking above this key area of interest here for us to be confident that we are printing price on the upside. Yeah, right now the 15 minutes, you could see we are possibly in a consolidating market. We want to see a price breaking in one of the two directions. So with that in mind, as a disclaimer, these videos are not by any chance meant for financial advice. They are meant for informative purposes. So kindly do your due diligence and observe risk management. For members who are interested to learn more about the financial markets, bridge the educational gap, open an account with HFM by going to HFM Kenya and registering an account. If you face hurdles, our experts will get in touch with you and help you navigate that terrain so that you begin this year with new opportunities, a new mindset to be profitable in the long run. Until tomorrow, the same place, the same time to do things the same way that has proven profitably consistent. See you and God bless.